But in reality, you buy up and you sell down. So now we're gonna use this to draw an up arrow. Up, boop, boop, and then down, boop, boop. All right. And you start to see now, like, okay, we're breaking above that zone. We're pushing up into a new level. And now what you'll notice if we zoom in even more to right here is once you're above that 23 EMA, you'll keep coming down and bouncing off of it, coming down and bouncing off of it. But that allows you to go higher. So let's say I wanted to take a trade, right? Let's go ahead and refresh this so we can get smaller. Let's say I wanted to take a trade. And I know that looks like chaos when you shrink it down like that. So I'll make it a little bit bigger. Where would I be looking to take my trade from? Well, while we were doing all of this up and down and up and down, when we were below the line, I'd be looking to take it from this red line on down. But now that we broke through the line, as soon as we broke through the line there, I'm looking for trades to the upside. So now you have to wait for things to retest. It goes down, and we finally break through, and now we're staying above it, right? So I would be looking to take an order about right here if we were to come down to that point. And as soon as I set up my order, I set up my stop loss. I put in 2 clicks, let's just say $5, right, for 4 clicks. And let's say I'm trying to make $20. So I'll click here on the amount and type in 20. That's 16 clicks. So 4 to 6, we're trying to 4 times our money. And it's already running, so it's a little too late for me to jump into a trade now. But I could enter market for the exact same numerical values, and then it will put me into a trade immediately. But what I would want to do in this situation is I want to be patient, and I want to wait for it to come back down to this red line before I enter a trade. So I'm going to right click right here, click trade, and click buy one. And that is going to open up my trade, and it's also going to show you what it looks like. So now if we come back down to this zone here, I'll get into the trade. As you can see, this trade has already run the full length of $20, and that is why I decided that. So now if we pull back, I'll go $10 as my pullback. So we'll do a 2-to-1 trade. 50% of what I'm looking to gain is 50% of what I'm willing to lose. And never get into a trade with more than what you're willing to lose. I don't care if you're trading options, Forex, futures. And this is how you protect yourself. This yellow line is how you protect yourself. This green line is the profit that you're reaching for. And this blue line would be your entry, right? As you can see from my initial analysis, we've run the entire length of $20, which is what I was reaching for, right? Now, the exact same thing would be done if you were trying to make $500, $2,000, $20,000. All it is adding more contracts. Now, I will let this trade stay open for the rest of the time that we're doing this video, okay? And as you can see, this candle opened green. It pushed all the way up in real time, and now it's falling back down to this level here, which is 1, 2, 3, and now 4 candles, which are at this level. So this is showing you that, hey, there's what's called resistance there. There are sellers right there. So sellers are pushing it right back down, hopefully to my blue line while we're doing this video. And if so, that would be really cool if we can get into an order. Now, I'll explain that when I hit this blue line, if I'm able to take my order, right? What I'm looking for is only 50% of the move. I'm not actually looking for the full $20. Now, if I get that, fantastic. But the first place I'll start taking profit is 50% of my expected move. So boom, we are in an order, right? Move that down to $10 and modify. And now we're in an order and it's turning green. So we'll slide this up to about 50%. And as you can see, there was a sharp pullback down below the red line or the 200 EMA, but that's okay. That's why we're down at $10. $10 is what we're willing to lose. And if we lose the $10, you have to be okay with that. You know, when you're in a situation where you're day trading, you have to understand that sometimes the trade is going to go against you, but we're very confident in our analysis that we are staying above this red line here, at least for the time being, because it's 12:54 going on 1 o'clock. So now we're looking for $10. If we can get $10 out of this trade, that is a successful trade. We are at 375 and gaining, and we're on the 5-minute time frame. So we entered this trade off the 5-minute time frame. Normally I would enter my trade off of the 1-minute time frame. So my trade actually would have been down here instead of up there. But since I'm entering off of the 5-minute time frame, everybody enters differently. We're going to see where this goes from there. Now, things can actually go all the way to this line here, which is why the $10 is very important to have that safeguard, because if it goes down there, as you can see, it will be well beyond my $10. But I'll be stopped out at $10. But we are $6.25 in profit. That is a very good trade. And then we're putting this at 50%, which is $10. All we're looking to make here, guys, is my $10 here. Can we get $10? Going once, going twice. Come on, let me have the $10. Don't be rude. And as you can see, it's really as simple as that. It doesn't have to be extra complicated. We can take the $7, because if I had 10 times that, it would be $70. So if I had 10 contracts in here, that would be $70 or $75 in how these go up. So now we're waiting, we're being patient. Our analysis was correct. Let's go back to the 5-minute time frame. We're still bouncing off of that red line on 5 minutes. And now we just want to come up to this line here of 49 or 54.91.50. And as soon as we hit that line, we'll modify, and that will do what it's called taking profit, right? And then I'll stop the video there because I don't want to give you too much. I just wanted to give you a simple trade and show you how a simple trade would go. So another 125 would give us 875. And I think 875 is just around halfway. So we're at 125. So we need another 25 cents to be at take profit. Get ready. Get set. Come on, go on through take profit so we can go ahead and close out this video. Modify. And now it's going to take profit. You see how it closed me out? And yes, it went directly to where I expected it to go, right? But there's this thing that happens with the marketplace, which is called uncertainty. Anything can happen at any time. So my goal is to teach you guys safe trading practices and to get you used to taking profit. You may be taking profit 50% early. You have to become okay with that, because at the end of the day, what I got out of that trade is $10 that takes me up to $2,030. And that's how you have to look at it. Every little bit helps. Every little bit you add to your account is going to help, guys. But I'm going to stop the video there because that's a lot to take in, and I don't want to overwhelm anybody with this training video. But that's how you read a candlestick, make an analysis based off of this red line here, or the 23 EMA, make yourself a quick $10, because if you can make $5 or $10, you can make $1,000, $100. All it is adding more contracts. And notice that we went right back up to about where that $20 would have been. And we will hit that $20 eventually. It's almost 1 o'clock. And with that, I'm going to sign out. Thank you guys so much for checking out this video. I hope this was helpful. I hope this gets you pointed in the right direction. Don't worry, there's going to be so many more of these before we really get anybody into trading. Right now, I just want you to learn about what I'm doing and see some of my best practices. Again, take the easy money always. That's all I did, was I took the easy money, or what's called low-hanging fruit, a quick grab of the liquidity. You guys have a great day, and I'll see you in the next video.